Tuesday afternoon here. Market just closed about 30 minutes ago. Let's talk through some of the most important things on the day. First things first, if you're inside of TTI, please look out for the premium newsletter that will be going out later tonight. We're going to be looking through some seasonality stuff. Put together a lot of information for you guys. I really think that you're really going to like it here. We're looking at the second half of the year. We're going to be talking through it again during our monthly charting session coming up next Monday, I believe, is when we're going to be scheduling it. When we first came into 2024, I believe it was our end of year kind of charting session, kind of mapping out the roadmap for at least the first quarter. We were saying, listen, we got to be full bull into 2024. All of the stats show that we should be long and continue to hold those positions, and that was the right call. We're coming up into June now, right? We're almost halfway through the year, and we need to re-update that. And we have some very bullish stuff here to prove to you guys, show to you guys statistically. So look out for that. It's going to go out later tonight. We're going to expand on it on Monday of next week. But really quick here, we had a pretty bullish open, right? Particularly around Apple, which we're going to look at in a second. Some news came out on Apple that iPhone deliveries or sales or whatever are up over 50% in China, and that caused Apple to really pop up pre-market. But throughout the day, it faded along with a lot of the other stocks, mostly because of bonds. Really quick, though, the S&P 500 closing up 0.07%. The Qs closing up 0.38%. This is an all-time high close, and NASDAQ, once again, not necessarily saying it was the most bullish day in the market from an overall market perspective, but from an individual index perspective, we do have all-time highs in the Qs today. I do want to point out that market breadth was relatively weak today. You have the QQEW here, your equal weighted ETF, still holding that previous pivot around that 120, 121 spot. So obviously this is still in bull territory for us with nothing to necessarily worry about yet, but it was spurred on because of NVIDIA and some of the larger market caps inside of the market. RSP holding above its previous pivot at 164 as well. Both of those equal weighted ETFs, though, down on today, showing that market breadth really wasn't there behind the initial push that closed our major indexes green. I do want to point out once again that emerging markets in China also showed some intraday weakness, closing down on the day. But realistically, the most important chart, which we're going to inevitably talk about a lot this week, is the bond chart, TLT. We know that right now bonds have an not inverse. Bonds are positively correlated to the equities market. Generally speaking, when bonds go up, the market's going up. When bonds come down, the market's coming down. And what we really wanted to focus on here, obviously over the last few weeks, bonds stopped going down and caught a bid that allowed the markets to continue to catch a bid into new all-time highs. But what we're seeing now is a divergence, once again, between the equity market and the bond market. Really focused on whether or not TLT could close above that 92 area, flip that 200-day moving average. That would have been step number one for us. Obviously, we're long. We've been long through this rally in bonds, but we weren't out of the woodwork. We've talked about this plenty of times. And here, after the bond auction data came out today, bonds had a particularly bad day today, and that caused a lot of the intraday weakness from the equity market. So what do we expect here to happen? Well, I don't know what bonds are going to do. I'm not a bond trader. What I do understand is that we are in primary downtrends across the board in bonds, and as of right now, that positive correlation exists. Whenever bonds sell off, the equity market tends to sell off as well. So we don't need bonds to necessarily be catching a bid. They don't need to be breaking out into new highs, but we absolutely don't want them to be capitulating into new lows. That is generally bad news for equities, and that's exactly what happened today, which is part of the reason why the equity market was as weak as it was overall. The dollar here, we're looking for a move below the 200-day moving average. We like the fact that the RSI held below the 50. We like that. We are in a primary uptrend in the dollar until we break that 100 area. This is still a primary uptrend going back multiple years, not necessarily quarters. But this weakness in the dollar has also allowed equities to rally into all-time highs. It would be a shame, and I don't think it's going to happen, but if it does, we'll obviously play it the way that the market is going to give it to us. We're not going to try to tell the market it's wrong, but it would be a shame if the dollar ended up bouncing here and hitting new highs, because all of these new all-time highs we're seeing in the market right now might be under pressure pretty quickly. I don't see it happening, but as always, it has nothing to do with my opinion or my bias. We're going to play price action as the market shows us, and as of right now, we're in a short-term downtrend in the dollar. We're going to see if it breaks below that 200-day moving average. I think if this popped back up and over the 50 RSI, showing us that maybe this bearish momentum coming in over the last few sessions is false, might be an uh-oh type of moment, at least in the short term, but we'll see what happens here. It's still too early to judge. Really quick, we had a couple trade ideas go out, but none of them necessarily hit today. If you opened up some of those trades that went out, if you're inside of TTI and open those up, you're totally fine here. But what we did today from a community standpoint, at least the trader development program, is we closed a bunch of trades, or not closed them all, but took profit off of them as they broke up and over 100% for the first time here. And you can kind of see some of these things. The ON trade that has come out over the last few weeks inside of our reports, we took and is now up and over, or it was at one point today up and over 100%. You can see we flipped half of that off for free, and some of the ARM stuff, semiconductors in general, you can see the QCOM trade we've talked about here up 600%. Semiconductors continue to be the place to want to be long. Semiconductors are where the strength is, and there's no reason to try to reinvent the wheel here, particularly when it comes to semiconductors. One trade that I do want to put more exposure on, and we will talk through this more inside of TTI at some point this week, is this ARM trade. This ARM trade has worked very, very well for us this entire year. We actually originally grabbed it back in November of 2023, and obviously you can see the meteoric run that we were able to hold through almost the entire position. It was really crazy. This was a 2,000% winner. Well, here we are once again after the terrible earnings event that apparently was going to ruin ARM. We're back up and over previous sell-off there with the capitulation move back on the 19th of April. Do we look to add into ARM here? Yeah, I think there's definitely going to be an opportunity here to add into ARM. Or post earnings, everything else looks great. It's not a matter of really if, but a when, and how do we want to attack this. The one bad thing about ARM in particular is that the contracts are very expensive right now for what we were originally getting them for, and then also we don't want to be adding exposure on a 9% up day. As an options trader, you're going to be paying a lot more in premium on those calls. Oil having a good day, causing energy to pop up. There's nothing there that we really want to be taking advantage of in terms of opening new positions in energy, not yet. Once again, it's all about bonds, guys. Bonds, and dollar. Watch for that seasonality premium newsletter that's going to come out tonight. It's going to talk through a lot of the stuff, and we're actually going to talk about it again tonight at 7 p.m. Eastern Standard Time. So if you're a part of the community, the Q&A session tonight at 7, we'll talk through some of that seasonality aspect as well. Once again, we had 2 trade ideas go out today. Both of them were valid, and we also took some profits on the way up today. I like the positioning that we're in. There's a lot of footwear and apparel for whatever reason. That ON position out, you can see the original breakout that we like to open off of. There's a couple other ones that are also within the same industry group that are breaking out. It's not up for us to decide why footwear and apparel is breaking out, but it is up for us to take advantage of it as long as it falls within our scope, and it does. That's it. That's all I got for you. A quick little roundup here. Not